You heard about the Airbnb crash, you know, the one where all of these Airbnb hosts are going to flood the market and finally crash the housing market. Let's talk about it because I've been talking about the pain in Airbnb for a while. So let me give you my thoughts and we will get into that. Let's also talk about why billionaires are selling single family homes. We finally have an answer thanks to the folks at Bloomberg. But I would be remiss if we didn't start today's daily financial news with a huge and meaningful thank you. Yesterday's daily financial news, I asked a very simple question. Why do you come back? And I have yet to even respond to every comment. I'm trying. They are all so well written. I thank you. If I ever feel a lack of motivation, all I have to do is go back and read so many of the nice words that you guys left. So again, realize that taking a couple minutes out of your day to write those nice comments meant a lot, and they mean a lot going forward. So again, thank you for that. I appreciate that what we're doing here is being consumed and it is being helpful. So thank you, thank you, thank you. I do want to give a shout out to somebody who has left over 400 comments. Angie, thank you for all of you do. Realize that I do see them all and I appreciate you guys for doing that. So again, folks, thank you for watching. Thank you for taking a few minutes to leave those nice comments. It did truly mean a lot to me. So earlier we talked about Billionaire Barry. Billionaire Barry has been a topic on this channel a couple of times. Again, Barry Sternlicht from Starwood. Recently, Barry has been shopping 2,000 single-family homes. Many people have been trying to position the fact that Barry, a billionaire selling homes, means we are at a housing top. This is much like Sam Zell selling equity office to the peak, to Bloomberg. Or not Bloomberg, Blackstone. Sorry, Blackstone. Sam Zell sold at the peak to Blackstone. People are trying to say that Barry Sternlicht is today's Sam Zell and a housing crash is imminent. Well, I suppose that is one example. Another theme I've heard from the doomers is that managing single-family rentals is too hard. Maybe. But in reality, what I believed was happening is that Barry Sternlicht is telling us on CNBC because he's bringing PowerPoint. When does a billionaire bring PowerPoint? A billionaire brings PowerPoint when he wants to stay focused and not get distracted. Barry Sternlicht, Billionaire Barry, is stressed. He is illiquid. He needs cash. That has been my opinion all along. And thankfully to Patrick Clark, I want to give credit where credit is due. Patrick Clark wrote a great article on Bloomberg, basically saying that Starwood is selling 2,000 single-family homes to Invitation Homes. Invitation Homes is obviously one of the largest single-family homeowners in the country, and they are about to get longer. So, why did Barry sell? Why did Invitation Homes buy? I believe both of those are great questions. One, it is very clear, according to this article, again, Patrick Clark, that Barry is having redemption requests, aka he needs cash, just like we talked about on this channel. Next, to all the folks that think there's going to be a wave of inventory because the billionaires are selling, I'm sorry to disappoint you once again. I know the Crash Bros want to scare you. I don't know how to prevent that. I wish you would do the work and focus in your buy box. But what is happening is billionaires sell portfolios to other billionaires. So Invitation Homes is undoubtedly getting a good deal. They are now buying these homes. They will add them to their rental portfolio. Barry Sternlicht is not listing 2,000 single-family homes on the MLS. He is not going to flood a market with 2,000 homes or several markets. He's going to sell the portfolio to some other billionaire, never hitting the streets. These 2,000 homes won't hit the streets. So again, Barry needs cash. Invitation Home gets a deal. Bingo, bango. Life goes on. Next, we had a Fed stress test. I don't know if you guys know what these are, but ever since the great financial crisis, once or twice a year, the Fed throws at the biggest banks what's called a stress test. This time, they said, what if unemployment goes to 10%? What if commercial real estate crashes 40%? What if home prices crash 38%? Could the 23 largest banks survive? Drum roll, please. They all survived. They all passed with flying colors. How could that be? Folks, the big banks, they got all the cash, right? We moved billions and billions of dollars from little banks and medium banks to the big banks. Second, the big banks are not, I repeat, not concentrated in commercial office. It's actually pension funds and insurance companies and some regional or community banks. So again, it should not be a surprise that the 23 largest banks with all the cash and very little of the risky assets passed. This does not make me feel better. The pain is not in the 23 biggest, it's in the smallest 2,300. But alas, if you're under, I think, 100 billion, you are not going through these stress tests. So again, I think these stress tests are a joke, frankly. I know why they were created. I know why they are there. But let's be clear, the pain that is in front of us is not in the biggest banks. And we are already seeing it. Regional banks, and this is what I warned you and I talked with Lance Lambert from Fortune about probably 6 or 8 weeks ago. You can go back. Lance has a great playlist on this channel. I proposed that small and medium-sized builders would start to die off. Why? Right, builders are crushing it today. You see the numbers. Toll Brothers, all these folks, record highs. Unfortunately, small and medium-sized home builders don't have the stock market to raise cash. They have to go to commercial or regional banks. And unfortunately, they're closed for business. So unless these operators can fund with cash, which they can't, they are going to slowly stop building. This is already occurring in Miami, Florida. There was an article written about Miami, Florida over last weekend that talked about more and more builders are pulling out because they can't fund operations. This is going to be a problem. The bigger will get bigger, and the kind of the medium and small will dry up, unfortunately. This is probably something we see across many businesses, many industries for the next several quarters, if not years, unfortunately. How about Q1 GDP? Woo! Q1 GDP last reported 1.3, expected 1.4, came in at a barn burner 2.0. Yes, GDP was revised up and quite significantly for Q1. On top of that, we got our weekly drumbeat of unemployment claims. Remember the last 3 Thursdays, we've been kind of 264, 262, 264. We felt like we took a step up and that maybe the job market was loosening up. Well, this morning, that notion went away. We got a number of 239. 239. That may not seem like a big deal, but we are right back to where we were 6 weeks ago. The job market is strong. And the expectations were for 265, and we came in at 239. So again, the job market. And what does this mean? I expect rates to go up this morning. I haven't checked the 10-year as I just drove to the office and recording this at 7 a.m., but I would expect the 10-year to be up quite significantly. And it wouldn't shock me if mortgage rates are over 7% by the end of the day. So again, pretty crazy going on. Let's talk about housing inventory. The CEO of Redfin, his name is Robert Reffkin. You can actually go and see this interview on CNBC. I found it on YouTube. Redfin CEO Robert Reffkin says he knows when inventory is going to explode higher. That's interesting, right? We want to know that. We've been talking about inventory collapsing. I had a scary video with Omar earlier in the week where his inventory is collapsing. So I was interested. Robert Reffkin, again, CEO of, I'm not Redfin, sorry. He's at Compass. I said the wrong company. Robert Reffkin, CEO of Compass. Too many articles this morning, my bad. Compass. He thinks inventory of available homes for sale will explode at 5% mortgage rates. Well, as of this morning or later today, I suspect rates will be at 7%. But let's let's test that thesis, right? We know about interest rate lock-in. We know the Fed broke the housing market. So the question is, when do you sell? Some of you watching this, you have a mortgage rate at 2.8, 3.1, 3.4. Some of you have that mortgage rate and the desire for a bigger or nicer home. So I ask you, the viewer, would 5% be low enough for you? Because again, in theory, you're going to sell one and you're going to buy another. When you buy another, you're likely spending more. So let's just put some numbers. You're going to sell one at 300. You're going to buy one at 500. You're going to give up a 3% mortgage and you're going to get a 5% mortgage. That's a 2% delta, but with mortgages, that extra 2% isn't only on the delta, it's on the entire loan. So we should probably do the math. I did not prepare this ahead of time. What's a 300K mortgage at 3% fully amortized for 30 years? And then what is a 500K mortgage at 5%? Maybe somebody can do the math and leave the answer below. My guess, that's got to be like $1,400 difference. So yes, some people will list their homes and sell. I don't think 5% does it. I think the magic number is like 4.5, 4.25, right? When you start to get within 1 percentage point, I think that is enough to get going. But this is going to be an interesting question. This spring selling season came and went. I think next spring selling season will come and go. Inventory's not coming. So I believe Robert, again, the CEO of Compass, is on to something. When does inventory come? So if you have a low mortgage rate, I would love to hear from you. When do you sell? What rate do you need? I would love to kind of get a collective knowledge. That would be wonderful. How about this Airbnb crash? Well, the crash bros are at it again. They have moved on from this scary headlines of vacant homes, which is nonsense. Vacant homes are less today than they were 3 or 4 short years ago. That was always nonsense, but it was a scary headline with just a touch of logic to scare you. Now that they have dumped the vacant home nonsense, they are on to the Airbnb crash. The Airbnb crash is going to cause inventory to flood the market and crash the housing market. Step back. Let's acknowledge that I've been warning about Airbnb for well over a year. I too think there's a lot of Airbnb pain coming. Unfortunately, these crash bros who are trying to scare you have it wrong again. They are focused on the market and they are focused on price. My Airbnb pain analogy is going to be at the buyer or the owner of the note, right? The mortgage. There are undoubtedly Airbnb operators who are losing money now. Some of them will switch midterm rentals. Some of them will switch month to month. Some of them will sell. No question. I suspect where the pain is going to come is when they sell all the furniture. I think there is plenty of pain coming from Airbnb. You're going to start to see lots of bedroom sets and, just lots of stuff that goes into a home. Because most people, when they want to buy a home or even rent a home, do not want it furnished. Think about it. If Airbnb folks came out and listed and everything in one city, would it cause a dent? It depends. I just had a conversation with Adrian Hernandez, one of the millionaires I speak to every week yesterday. I think the video post today. Adrian Hernandez was making, what was it? $15,000 a month with Airbnb in Lake Havasu, Arizona. Do you know what happened? You start making $15,000 a month with Airbnb in Lake Havasu and you start telling your friends, they start buying homes in Lake Havasu. So what Adrian Hernandez told us is the inventory of Airbnbs has exploded in Lake Havasu. And now he is losing money because there is too much supply and the prices are falling. So what is happening in Lake Havasu? Another one of the millionaires we speak with each week, Omar, he got proactive. You can go back and look at his playlist. 3 months ago, he took his Lake Havasu Airbnbs and turned them into long-term rentals. One way to go. Adrian, who was up to 3, I believe, in Lake Havasu, sold 2 of them. Now what is going to happen in Lake Havasu? I suspect there are going to be operators who bought in the last year that sell and lose money. Lake Havasu, because it is essentially a weekend, vacation area with the lake and water sports and all of that, we'll probably see some price correction. Now, if we go to a market like Fresno, California, again, one of our millionaires that we speak to each week, Jason Pritchard, has Airbnbs. He told me that his Airbnbs were losing money. He told me he was thinking about getting out of the business last year. Lo and behold, about 30% of the inventory is gone. He is now making money. What is the difference between homes in Fresno versus Lake Havasu? Lake Havasu is a little pocket. Fresno is a big market. Fresno is struggling for inventory for mom and dad investors, first-time homeowners. You take an Airbnb that's just in some neighborhood, you throw it up on the market, it's going to sell. You're not going to see the price corrections. So to net all of this out, Airbnb is not going to be the reason the housing market crashes across the country. Yes, the crash bros will talk about it. They will scare you. They will bring on all of these stats. There will be markets that are very small, like Lake Havasu or Bear Mountain, somewhere in California, that just got inundated because all these people were making money and told their friends, and law of supply and demand. But it is not going to cause a national housing crash. There's not enough inventory in Airbnb, and there's certainly not enough inventory that will be sold. That's just not how it works. So if you are hoping that Airbnb is going to cause a national housing crash, once again, the crash bros are going to scare you, and they're going to be wrong. So let's talk about a couple of things. I don't know if you guys know this, but the YouTube channel is almost 50,000. I get pitched new content providers almost every day now, probably a dozen a week. I brought one brand new one on yesterday, Privy. The reason I bought Privy on the channel was they're basically and you can actually go back and watch the interview it posted yesterday. Privy is that kind of technology that you have a metal detector. You're out on the beach looking at all this data, and it's helping you identify where you might want to look. It does not stop doing the work. You still have to do the work. You still have to have a buy box. But thankfully, Privy and the founder that I spoke with yesterday is talking about adopting it. Privy to date has been for fix and flip and wholesale. They reached out to me. I gave them 2 weeks of due diligence. I think they are onto something for buy and hold investors. So at this point, I've added them to my Wednesday schedule. If you can, take a look. Let me know what you think. I think they're going to help us. I think they're going to help us learn markets, go other directions. They're going to help us with our buy box. There should be another video posting today. I would love to hear your thoughts. And then finally, some of you have asked about the crazy shirts, right? I have this crazy shirt on this morning. Again, I like color. This is something that brings me joy. I thought about this topic after speaking with Dion and talking about the FIRE movement and scarcity mindset and not doing things that bring you joy. One of the things that brings me joy is wearing colorful shirts that, frankly, bring smiles to my face. The collection that I like the most right now is from a street artist. A street artist from Los Angeles. His name is Kenny Scarf. Kenny Scarf is who I'm currently buying. I have a couple, and this is one of his stuff. Unfortunately, Kenny Scarf partnered with Dior. Yes, folks, Dior. This is one of his shirts. I have a couple of them now. I'll be buying some more. But let me just tell you, Dior shirts, not cheap. But again, I like wearing them. So when you see me wear these, shout out to Kenny Scarf. I love what he does. I think he uses a lot of color in his street art. So that's what these are. I just thought you would know. And then lastly, we're at 2,706. What the heck is that? That is the countdown clock to 50,000. Yes, folks, be part of the first 50,000. Hit that subscribe button, like, comment, and again, I can't tell you enough. Thank you, thank you, thank you for all the kind notes that were left yesterday. There are more for me to reply. I didn't want to reply just with a thank you. I wanted to read them and reply, so I will continue my replies this morning, guys. Have a great day. Take care of yourself. Bye.